All right, folks, we're live. February 27. Welcome from YouTube and from Patreon. Um, let's just make sure that folks are in. So if you're in, if you can see this, if you hear us okay, just wave, say something, and let's go. Okay, I'm seeing a few Patreon members. Okay, here comes the YouTube. Um, Here comes the YouTube and the Patreon, the hybrids. But we got to fix that tonight, folks, because a lot of you are complaining about double billing and all of that. So we have to fix that tonight. But and I'll show you what. But let's begin here with the most important chart right now, which is Apple, because the company came out and said the two magical letters AI, and now we see this reaction. Um, is it going to stick? Is it not going to stick? And the timing is really peculiar because it came right before as the stock was heading to take the lows here. So we were heading down to take the lows. And then came the AI, the two magical letters, and here we go. What I would say for Apple is you got the algorithmic reaction, the huge buying here got really excessive in the 5 minutes. So now we go down, retest 182.66. If we lose it by the end of the day, then it doesn't change anything. It was just in two letters optimism, and then we went down again. The algos overreacted. And we go back to the same theme of, the managers are now de-risking a little bit in the big caps and the chips, and they're moving more to the small caps and the value sectors. If we close above 182.66, then you gotta be prepared that Apple will probably catch more steam tomorrow. With that, we could see a rotation back into the big caps. And the reason is if Apple gets bought, they will buy everything along with it. They're buying the ETF, basically. So the close for Apple, to me, is a really important indicator because, again, if you have a put options on Apple, I mean, technically, you're still below the 200 days moving average. But I would say from a leading indicator perspective, a close above 182.66 will probably get us above the 200 again. And this is the kind of stack that every time it goes below the 200, you see a rescue of some sort. Because if it does make a clean break, you usually see a nasty correction and it drags the entirety of the market with it. So you can see the previous attempts to see a rescue, rescue. Can they do another rescue here? Possible. I'm not going to say that it's not going to be a rescue operation. And my leading indicator would be 182.66. Now, if we look at the actual indicators, anything read the Dixie today? Not really. I'm not seeing anything here. I'm actually loving this formation. And the reason is if we clean it up and just expand a little bit so you can see it, it appears to me sort of the rubber band being stretched. Comes the PCE, boom, we have a big pop higher. If that is the case, then that's going to get the algorithmic market algorithms attention and cause a flush. But for now, for today, there's nothing we can look at in the Dixie and say one way or the other. Of course, a lot of you have been asking, so if the Dixie is going down, how come the GDX is not reacting? Well, maybe investors and traders are not really sure the GDX is done. And this is why we see the GDX going down to close the gap right here, rather than heading higher. So I'm not ready to say that, the dollar is weak, you got to go with the GDX or even the SLV at this point. This looks weak below the 20 for now. We need to see a resolution of the dollar, and then we can talk about metals. Now, as far as oil, I mean, you see the movement today. It seems to me that oil is ready for a breakout, and this breakout will be above 85 on the Brent. And it only makes sense. The market is rallying, going bananas. Why would we drop oil in a recession manner? I think OPEC is going to continue the rate cuts, and I think we'll see oil prices above 85 if the conditions that we have right now continue. And this is why if we look at certain ETFs for energy, you look at the XLE, I mean, that's having a little bit of a bad day because of Chevron. I would avoid Chevron. I would avoid Hess. Chevron has been a lousy investment since they made this stupid move, and I just stay away from it. Unfortunately, it's going to drag the XLE down with it. But Exxon Exxon looks a lot better. It looks as a chart that is ready to turn around. It's just being dragged by Chevron right now. And of course, the refiners, now we see that the RBOB is moving a little bit, so that's good for the refiners. VLO, I think we're ready. We're getting really close. So we got some rejection at the previous high. I think we're ready to go higher, to break above and have a decent breakout. You see the momentum here firming up. So keep an eye on the refiners. I think it's just a matter of time before we see a breakout. As far as yields, what I'm seeing here, if you look at the daily chart, not a major, we're just consolidating. Consolidation is okay for the market. They can handle that. Sharper moves, that's problematic. Down or up, that's going to cause algorithmic reactions. But the consolidation, not a problem. So we see, for example, the IYR weaker. That's kind of peculiar. Why is it weak a little bit here with yields consolidating? But then you see the yield-sensitive IWM, and now we don't even have a bear flag. And now we see the momentum firming up. I know a lot of folks want to, beat down the IWM. I got you. I know it doesn't make sense, but now they're rotating into it, and that's what they're doing. We can't fight the flows. So I would say let it go as it is. Maybe it faces some rejection here at 205.49, the upper Bollinger Bands. Comes the PCE, we see a flush down. But the IWM is not shortable until we lose the 20 days moving average. Otherwise, you have to look at the weekly chart, and we can still see firming up of the momentum. And here we have plenty of room to go higher. But of course, it would take expanding the daily Bollinger Bands first, and that's going to take a little bit of time. So you'll know right away what the shot is in the IWM. But let's get the PCE out of the way. Now, SPY, let's look for the reminder of the day and what happens from this point on. Here's the 5 minutes. Let's do 15 since we're not really doing a lot of moves. So all of this is just dry, low volume selling, nothing really important. You see the pop in Apple here got us a little higher, but if we close below 507.75, then we stick with the same idea that if you look at the daily chart, it is still a bull flag pattern, and the risk remains to the upside. Until what? Until we close the gap and we lose the 20. Two things have to happen. For now, you have to assume that this is going to be the case, meaning the bull flag breakout absent of a sell operation that comes at the end. I don't see it, to be honest with you today. I see it maybe after the PCE, but we need to lose more support lines before we begin talking about, okay, this was a NVIDIA reaction and now it's over. And speaking of NVIDIA, you'll see the same thing in the Qs, by the way. I mean, we got to retest the 435, but no break. We can't do anything with the indices right now without a clean break. If you're holding short positions in the Qs or the SPY, you got to have some sort of an exit strategy. I would say that if we go above the resistance again, in this case, here it is, 440.59. I mean, how long do you want to hold the grudge against the indices? If we break the 435 in the Qs and then 432, then we can talk about, okay, let's put them back in. But we need to see more damage because so many times we never really got below the red line except once here, and that was also another trap. So I would look at certain indicators. I would look at Apple. Again, the closing, really important. You see the importance of this support line here. If they give it up, okay, then it's just an algorithmic pump and it doesn't really matter. If you look at NVIDIA, that's the most important one. Consolidation, nothing is going on. Daily chart, anything we can read in NVIDIA, not really. But again, I think that the momentum went way too high. And either it's going to be a case of consolidation here for a little bit, as we've seen here before, and allow the momentum to cool off. And to my eye, that would be bullish. But if we have the crossing and we begin to go down, there's a possibility we can close the gap. So for now, NVIDIA cooling off, it allows us to at least look at other things besides, okay, NVIDIA is going higher. What else? The market is going higher. So it gives us a little bit of time. I would not dismiss, though, the risk of, if we turn these off a little bit, that this could be, where did you go? Here it is. Oh boy. This could be here a sort of a bull flag consolidation. Crazy with these looks on the MACD and the RSI, but we have to be aware of that. Until what? Until we lose the low of this breakout candle. The low here, 662.48. If we lose that, then okay, we have a possibility of a reversal. Worse, of course, if we have a gap down in NVIDIA, then we have an island top, but we're not there yet. Now, if we look at other chips, mostly, of course, semi-macro, or whatever the hell it's called, super micro chip computer. Here, what do we see? We have to look at the hourly chart. This is an hour-by-hour chart. NVIDIA is not moving. This is just consolidating. It is a bearish consolidation, but as I said in the chat in Discord, we can also make the case. So you see that this one is losing momentum, despite the pop from NVIDIA. Got a little bounce, if we expand this a little bit, got a little bounce from the average, but now it's heading down again. So it's suggesting weakness, and we could see a snap and a flush down, a big one. But at the same time, we can argue that this is also a falling wedge, and we can break higher in case NVIDIA decides to make another move higher. So for now, I would say super micro, you want to get the hell out because the implied volatility is slowing down. As the implied volatility slows down, watch what happens to options. So let's go with March 15th, I don't know, 800. And you'll see that the implied volatility has cooled down dramatically. Now that could heat up again if the stack begins to move. But for now, this consolidation eats away the implied volatility and decays the options. So you want to get out until they make a first move up or down, and then we can chase it after that and capitalize. AMD, since we talked about it today, AMD, it doesn't look to me that the trade, I mean, it worked out for about like 5 minutes once we got a break here, but then we got a reversal and got a retest here. So I'm leaning toward closing the put trade because this behavior of the reversal and then retesting the support, that tells me that we're probably not going to go down again, but I want to give it a little more time till the close and see what happens. So we'll keep it as it is right now. Amazon is another chart I talked about, and you can see that we're struggling here. So here's the 30 minutes, for example. Tapping in a shoulder, we can argue about that, but 5 minutes, we're struggling with the support line, 173.60. Of course, Apple, again, when Apple goes higher, it lifts all of the big caps. But if we lose 173.60 and we close below by the end of the day, I want to stick with some Amazon puts, and the reason is, if you look at the daily chart, you can see that this momentum indicator is snap. It wants to correct. Like all of these charts want to do a major correction. The first one since October. I mean, Amazon got a little nice one here in the beginning of January, but it needs to finish and go back to the mean. So this could be the beginning of a correction. Of course, the confirmation is losing the 20. In a real correction, we go down in the retouch of the lower Bollinger Bands. I mean, that's not going to end a bullish trend or anything, but it will give us a nice correction that we can play. You can argue also the double top. You can see it here and here. So we have good indicators that Amazon might be heading down from this point on. So I want to stick with that. Tesla. A lot of you trading Tesla, so let's talk about that. Interesting reaction for Tesla. So you got the bull flag. Let's do 30 minutes. So we got the bull flag breakout, but we're not closing above 202.5. And this might be sort of a give up ABC pattern, or you can argue it another way, right? Tapping in a shoulder. Confirmation. We need to lose this line right here. So I'll take the low of 198.33. If we lose that, maybe Tesla just ran out of steam and it can't really make it here. You look at the daily chart. Let's plug in moving averages. No, nothing here saying reversal yet, though, so you have to be careful. All what we got is we headed to the upper Bollinger Bands, and that stopped us. So for now, I would still say that the bullish outlook still in control and in charge for Tesla. But you got to be really careful already here. We could have a bearish trade and a snap down. If we lose right here, and the low would be 198.26, leading indicator that we could be flushing down and we're done with the attempt of closing the gap in Tesla. What else should we look at? Microsoft. I mean, Microsoft, if we just look at the hourly chart, here it is. Like I said, the managers are now de-risking out of the big caps, but will Apple do a rescue mission here and bring back the big caps? We have to watch the close. But for now, I mean, we were heading down to just close all of these gaps that we've done after NVIDIA. And that would have been a good leading indicator. If Microsoft closed the gap and went down below 444 again, to me, to my eye, that would be a leading indicator that, NVIDIA failed to stop the correction. But now we have Apple thrown in the mix. So we'll look at this one more time. Not a good looking candle in the hourly. And you look at the 5 minutes chart, whoops, we're losing. Anyways, so let's take some questions from you here and see what we're doing. Apple said AI. Yep, that's what they said. And boom, $60 billion worth of value added in what, couple of minutes? I want to make sure that folks are here. So if you folks are here, you're just listening and you're not typing, let us know. I want to make sure that I see the Patreon members. I'm not seeing a lot of YouTubers though. And we'll address this issue tonight. Okay, good. If Apple closes above 182.66, I plan to close. When is the time to do so? 15 minutes before the close? I would look. So right now we're looking at what? We're looking at the 5 minutes. 15 minutes. It looks to me that in the 15th, so if you look at the 15, after 12:45 Pacific, your time will be different, of course. If we're still below, like this look, which is comfortably below right now, then I would say that there is no risk. This was just an algorithmic reaction, and nobody's really excited about Apple. Okay, so they said AI, big deal. Who cares? And by the way, it could be a major catalyst for the whole AI mania. If you have a name like this that says AI and then it flushes down, and nothing burger, what does that say? What does that say about the AI optimism in general? So, I think that let's watch it. I'll let you know. We'll be here till the close, and but for now, honestly, for me, I did not close Apple puts. I'll close them if we go above. Again, if we go above again, then okay, I'll probably close them. The other one I didn't mention, folks, is the XBI. It's a little too hot for my taste. If you got any call options on the XBI, I suggest that you close. I mean, the trade that we've done 2 Fridays ago, I think it's already done. We've reached the target. We're done here. We're at the way overbought in the hourly RSI, and you can see the rising wedge. So if you're a swing trader, you're brave enough to take the shot against the XBI for a pullback, say the 100 puts, for example, I would do that too. I already made enough money from the calls, so I'm not going to take the shot here and screw the trade. But here it is, XBI. Let's see what the weeklies would cost us. So if we go to the puts, weeklies will cost you 45 cents. A reasonable pullback will be under 2%. So if you can squeeze one by tomorrow, you might make some money, but you can see the risk versus reward is not really that good. So if you're going to go with the 100, you probably want to do a spread, and you want to do a tight one. So you probably want to do the 98, and then you're spending 34 cents. Here, this will cost you, let's say, 43, and then here you'll be able to catch, I don't know, 15 cents. And you can squeeze some gains if we have a pullback. I'm not going to be cute, though. I'll just take this as a sign to book profits, and we're done with the XBI trade. We looked at Tesla, thinking of re-entering 207 calls, expiration date March 8 or 15, but worried about the PCE reaction. That's a good question. Okay, so like I said, Tesla, I'm not liking this reaction. So you want to go with the 207. I would say if you close above 202.5, you can do that. But a lot of risk with this reaction. Why did they give up? I mean, here we saw a give up. They picked it up again. We got some energy. So the whole point from this rejection is, folks, we have no energy. We ran out of gas. Okay, let's go down and refuel. Another support line. So we go down here, can't find support. We go down here, we found some support. We tested, we fueled, we got back here, and we failed again. That's not a good behavior of any chart. We should have been able to close above 202.5. So we have a seller here that keeps selling. And I would say going with the 207 calls, too risky right now, unless we're going to close above 202.5. Okay, we talked about XBI. Biotech were hated for several years, worth holding the port for a longer swing. Look, if you're a trader, like I said, you close it. If you're an investor, you don't really care about the hourly. That's not your concern. If you bought here, you're fine. I mean, you're sitting on profits. Maybe it's worth selling some calls, just to raise some cash. So if we do long calls and we sell those, so you want to sell a call. Can we do the 103, for example, and capture $100? Can we do the 105, get 50? That's not enough. If you're brave, you can say that maybe we'll see a pullback below 100 by the end of the week, and I want to get the 100 calls as covered calls, book my profits here, and capture the $300. I mean, you're getting compensated $3. You're getting compensated for the $3 worth of value that we're trading at right now in the 100 calls. So you can do that too as a de-risking strategy. But then you look at the weekly chart, and we talked about the XBI before. So double bottom, and now it's getting a little too heated. But we broke above this resistance. We failed to break above for a while, for since 21. This is a major accomplishment. Now, probability is we're probably going to go down and retest it. If it is okay, we come back up, and then the XBI is out of the woods. So for now, as an investor in the XBI, I would just use this opportunity as a de-risking strategy. I do like the hundreds, to be honest with you. The 100 calls for this week, I do like this trade. Just to raise $300 per 100 shares, I do like this trade. Fan, if we hold the IWM 196 puts May 17th with TZA 19.5 put from March 1st, does it make sense to close the IWM position before a 205 breakout or PCE? Thank you. So you have the 196 puts, and then you have the 19.5 puts on the TZA as a hedge, I believe. Look, right now, I would say the risk is firmly to the upside in the IWM. I know that the PCE could roar in the party, but I think right now that we're getting bullish momentum. And look, whether you wanna stay with the IWM puts or not, I would say why not just close them? Because if it goes up to 205.5 tomorrow, you're losing in your main trade, which is, I'm assuming, the one that you spent most money on. Your hedge will appreciate because you got the TZA 19.5. Let's see where that's standing. So that's already in the money. And you can see the behavior here, splitting and maybe coming down furthermore. So looking at the charts right now, absent of the catalyst of the PCE, I would say let's get out of the IWM, keep the TZA for a little bit, and then cover before the PCE comes out on the TZA. Just book the profits. And then we'll see what happens. If the PCE drops the IWM down, we can always re-enter the trade. But holding on to it through the PCE, no. But it's really impressive that you've done this strategy. That you have a main trade and then you hedged using short-term puts on the TZA. That's the right kind of thinking that we want you guys to adapt. Okay, we got YouTubers, we got Patreon. Craig says I'm here, but somehow on YouTube, even though it canceled. And on Patreon, I think. Well, you canceled, but you still got the badge because YouTube will count you all the way till the end of your previous payment. That's what they do. And the stream is happening via YouTube, so that's why you're in YouTube. Matt, what do you think of BIIB calls? You know, this guy, expensive calls, and every time you bet for a pop, it just doesn't happen. Honestly, I wouldn't do it. It's just an expensive stock. I see what you're looking at here. Maybe a call, maybe it's going to pop higher, but I would stay away. I mean, in biotech, even Regeneron would make sense better than this guy. But like I said, XBI, it's going to pull back, probably led by Regeneron. But look, Biogen, stay away. Honestly, stay away. It's just too expensive, and every time we try to do it, it doesn't happen. Eli Lilly is probably an interesting chart. You don't want to bet against this monster, obviously, but maybe it's time for a pullback at least. False alarm here. Maybe this one has a better chance. And when we look at this guy doing maybe an inverse ABC, and by the way, there is a CNBC special about Ozempic, and they might talk about the side effects a little more. You might begin to hear a movement of, Ozempic is making folks having unhealthy expectations and unhealthy weight loss and yada yada. You know, that's the bullshit crap. It might begin to hurt the Ozempic mania, I think. Not from a fundamental stance, but from that sort of a social pressure kind of stance. So I might pull the trigger here and go with some Eli Lilly puts. I mean, you look at NVO, it's the same thing. You see the loss right here of momentum. You see that we were flirting with the 20. If we lose it, there'll be a confirmation. So maybe if you're not in a rush to buy Eli Lilly puts, maybe leading indicators NVO losing the 20. And then that's because NVO options are not really good to trade here. So we'll go with Eli Lilly puts if we lose the 20 on NVO. But prepare for that because the narrative is going to change on this Ozempic mania. Okay, let's go back to Apple, see what's going on here. The 5 minutes, we're back. See, they're fighting to keep this important support line. So, should we consider using this bump as a way to average down on the Apple 315, 180, 170 puts? John, that's a good question, but I would want to watch the close here. There's a good chance that we might have to close these puts and just abandon them completely, because last thing we want to do is stick to them or average down, and then we're going to gap higher on Apple because, now we have an analyst who comes out and upgrades Apple all of a sudden because they said AI. That's the risk. So this is why we're watching right now. I'll let you know what I'm going to do. It's always better to be on the safe side. So it appears that we're going to close at 182.60 or above, 66 or above, better to be on the safe side. Take a small loss for now, even if it is, and then you always have the opportunity to re-enter. I would say the formation that we've done so far in the 5, it shows us that this support is important for the close. So the low was 182.18. If we crack below this line, then we're probably comfortably we're going to close below the important number. But let's watch it. It's interesting for now. Jim, present, good. I don't like this music. How can I get a refund on Patreon? I signed up for it without canceling YouTube, but decided to stay on YouTube. So I have double paid for 1 month. We're going to address that today. And in Patreon, it's so easy. But at the same time, folks, there has to be a price to be paid by YouTube. What they've done is not right, and they can do it again. And I still have a problem with them. My January payment was taken off, not halted, not withdrawn, not withheld, taken off completely. So we could have problems down the line with YouTube again. So I want to address that. But we'll talk about this tonight. Patreon is, I think it's a lot easier to issue refunds versus YouTube. Immigrant Dad. Look at VKTX, another Ozempic competitor. Twice as effective, phase 2 trial result coming in. No positions, just FYI, since you're talking about Ozempic. That's a good, that could be another one, with the competition heating up, just like the AI mania. Somebody's going to have a better competitor. VKTX, somebody's going to have a better competitor to Ozempic. I mean, the way my doctor says it is, Ozempic is Toyota, Mounjaro is Lexus. It's the same thing, but one works a little better than the other. Now, this guy is popping higher for the obvious reasons. I wonder if, the stock more than doubles today. I'm pretty sure somebody caught it ahead of time in the options market, insider trading, but right now, we're going to chase this guy? No, but it could be also among the thesis that if you want to trade this thing, you're better off not chasing the calls or betting for puts that's going to reverse. You're better off going here and grabbing some puts against Eli Lilly, because more competitors coming in will add more to the thesis that probably the Ozempic mania and Eli Lilly is probably coming to an end. Look at this. This is just insane. What the stock has done is absolutely insane based on this. I don't know if they're going to be able to turn all of this into actual tangible value. I doubt it. But let's look at some Eli Lilly puts, just explore at least the position. If we go to the weekly, that's too far. The daily, we'll probably want to close the gap here, so we'll take the wick to be a little more conservative. We'll take the wick, 670. Let's call it 670. So let's go with the 670 calls, or puts, excuse me. Here it is. The 700, so the 670, we know that's going to be good support. So that's where we want to sell. But that's too... Okay, let's do it this way. If you go 670, require a drop of 13% in a couple of weeks. So that's not something we want to bet on. So how do we, now that we know that we have support here, we have, of course, the 20, and then we have, so the 20 is 730, and then we have 670 as another support. So one way we can construct the trade is go to the 720, for example, and then we can sell the 700 and have that exposure. And that's going to require a drop of 6.4% to break even. If that's too far for you, then you want to upgrade it. You want to have a $20 difference, but it's going to cost you now. See, it's going to cost you a lot. So I do like the 720, 700 for now. Cost under $200, and if we get a drop by the required move, we'll make some money. Now, if you want to go to April, for example, you can go with the number that we just talked about, which is the closing the gap here, 670. It's going to cost you a lot. So another way you can hedge against that is probably selling the 640, 650, and you can lower your cost. So if you go closer in an expiration date, you want to be closer to the money. If you're going further down the line, you can go out of the money with a 670, 650. But this is the idea for now. No commitment yet. But good point. It adds to the evidence that we're probably getting close to the end of this Ozempic mania. Let's go to the SPY really quickly, see what we have. Nothing to see, really. Nothing to see here. Apple. Here we go. Now watch this support. Let's see how that support is going to hold, because that's going to be confirmation. So support here, 182.18. Let's identify that just to get a cleaner line. Let's do that here. 182.18. Whoops. Oh, that's good, actually. 182.18. Here we go. Let's keep it here. If we lose that, confirmation that, okay, close is not going to happen. And Jim, I don't know about doubling down or averaging down right now. Let's just be thankful if Apple closes below this line that, okay, temporary pump, no need to close the puts right now, but doubling down, I'd like to see more before that happens. Hey Mav, I hear you with CVX, but if we break above 151.77, is it worth taking a shot at 155 calls this week? They're trading at 22 cents a piece. I remember that the Hess deal was not liked anyways. Yeah, because it's not just the political risk, it's what is the benefit for Chevron, really? They're overpaying for Hess. Now, if we go to the 155, meaning closing the gap, so if we have a full recovery on Chevron, is that possible? Yes, but the problem is you look at the chart and you see this is an ugly formation. This is a bear flag. And you also have support. So you look at the low here, the low of the wick was 149.67 or 76, 149.76. We did not lose that line. So far, so good. But as far as taking the shot to closing the gap in 155, I don't know. I'm not in that camp yet. Even though, I mean, you look at crude right now, it's doing pretty good. But I'd rather go with what's been working rather than CVX. Even though the options might be attractive for a move of, let's say, 2%. So you're betting for a 2% pop. Let's see what Exxon would give us for 2% pop. If we take here Exxon, and we get another 2% pop or so, that will be in the territory of 106. So let's see if these options are better. Exxon, let's go to the weekly. 106. That's not going to happen. So we go down to a move of about 2% or so. Close to about 24 cents. You know, and Exxon is a much better looking chart than Chevron. So it's the same thing. I'd rather go with the Exxon versus the Chevron calls. I'm betting for a recovery. I mean, Exxon, it looks a lot better chart-wise. What I don't like, though, about Exxon, just to be honest, is we got to the gap and we couldn't close above the gap. You see that? So we went here, consolidated, and kind of given up. Not a confirmation yet of giving up, but another scenario could be, whoops, right? So maybe you want to hold your horses on buying energy from now, at least in the short run, even though the commodity is doing pretty good. So sometimes we have to switch. Sometimes we go with USO versus the stacks. And right now, the behavior of USO, if we look at retesting support and moving to the highs of the day, I do like that behavior a lot better than the equities right now. And plug in the Bollinger Bands, get rid of the pen. Comfortably retested the 20. We're above. To be honest with you, I'd rather go with the USO. So let's do USO calls. If you're looking for just lottery ticket for this week, why are we seeing February 28th? Yep, because we have an expiration here, but we want to do the first. So let's go with the 75. More reasonable, 2%. You're spending a little more. I mean, if you want to go to 76, that's okay. 22 cents, that's okay. Honestly, it's a better move than the Chevron or Exxon. But here's what I would do for a lottery ticket. 75 and then sell the 76. So your maximum value is $1. So you'll make your profit will be 72 cents. But again, you're only spending 27, 26 cents a piece to make $1. This trade to me is a lot better. 75, 76 calls, lotto ticket in USO, much better than the individual stacks. At least, I mean, sometimes we have to switch, folks. On certain weeks, the equities look better. Other weeks, the commodity looks better. For now, I think looking at the formation, the commodity USO looks a lot better than the individual stacks. Let's go back to Apple, see what's going on here. Here's the 5 minutes. They're defending that line pretty good. Okay. Good thoughts, bear or bull? I mean, every chart has its own thing going on. My prediction, Tesla continues to sell off today and tomorrow morning, retesting your 196.5 line before bouncing up tomorrow. Cannot predict what happens with the PCE, of course. And look, I mean, I don't want to make a big deal about the PCE. I mean, it could be important, it could not be important, depending on how big the beat or one way or the other. So we now know that CPI going higher, PPI going higher, so everybody knows that PCE might be a little hotter than usual. But what if that's already priced in expectations? So we have to keep it in mind. We have to hedge, always. We have to hedge when a big catalyst comes out. But I don't want to be too fixated in the PCE that it just consumes me and consumes everything I see in the charts. So if we go back to Tesla, PCE or no PCE, the reaction is just negative. The reaction is not good today. To me, to my eye, it looks as somebody, we have somebody big here who continues to sell at the 200 level. Every time we go to 200, they take profits. So right now, they could force exhaustion and give up. And we can retest 190, 626. We can go even as far as 190.59. And this is why I would say hold your horses on the calls. And the puts, not yet, because you need to see a confirmation of an ABC. And that's not going to happen until you take the B leg out, the low of the B leg right here. So for now, there's nothing we can do in Tesla. But if you had calls, oh, definitely, I'll book some book some profits right now, because this seller showed up twice here. And if we go back in the past, I mean, you can see that this is a really important level right here. We've seen reactions, but here in this formation, we have a seller, somebody who continues to sell every time we get here. Yeah, you're right. Not wanting to buy puts, though. Tesla could pump in the last. Yep, I'm with you. Right call. Based off small pop today on both the 30 and the 10-year, do you think a hot PCE could have a big effect? Also, if they're rotating to the IWM, if rates surge, would the managers exit out of the IWM? I think so. I think that the rationale would say, if we look at the IWM, and I mean, they're all betting right now. Maybe they have insider information that the PCE will be softer. Who knows? But I would be careful with that assumption too, because I think goods inflation. I mean, if you look at durable goods today, the number is down because of Boeing and the delivery of airliners. But if you look at the details of durable goods, prices are beginning to show up and moving higher because of the Red Sea problem and many others, of course. I think that's going to show up sooner than later in the CPI and PCE and PPI. That would be a bigger problem. Now we have sticky services inflation. Oh, by the way, goods inflation is rebounding. So either way, I think that rates are heading higher. You see the reaction to the TLT today. So TLT in orange, IWM is in a complete divorce right now. I just don't trust it. I don't trust that this is going to hold, but we can't fight it until we have solid evidence that, okay, they were wrong and they're going to pay for it. Then we can hop in and close this gap and take the IWM down. Probably going to take the lows if that is the case. But for now, folks, it is a crazy market. Folks are, with big money doing a crazy move, unexplainable. I mean, let's try to explain this. Why is this guy continues to go higher? What is the reason here? Right? The charts have AI on them. I mean, what is causing all of this? But the flows are on autopilot and they continue to go on. You see chart after chart, even the good names, even Costco, you have to be careful about. That we have just autopilot inflows and the managers are keeping the inflows going on in these names. When is the wake-up call? I have no idea, but we're getting close. Here's Apple, most important chart to watch. We're holding, folks. If we keep this pattern, in about 5 minutes or so, I would say, okay, we need to close the Apple puts and be prepared for the risk of, oh, we're going to rotate back to the Qs now. You don't have to apologize. There is no such thing as a dumb question, but I'm with you. I'm with you that it doesn't make sense. Just trying to gauge how you think thing would play. Yep, we talked about this. Can you please clarify how you arrive at precisely 182.66 for Apple's support? There's no such thing as precise, by the way. It's just my best guess for a support line. Because you look at the actual reactions. This was 182.68. This one was 182.61. This one was 182.70. And then you look at the 1 minute chart, you'll see that the reactions will differ. So here we have low 182.65. So again, it is a best estimate for where the support is. And we drive to that. Look at the reactions here that we got before gap, and then we find support. We didn't close the gap. We found support here before. It was a point of resistance before. So you look at the previous behavior of the chart, and you can come up with a number as close as you can. But there is no specific precise number. If you picked 182.60, 165, it would have worked just as good as the number that I have. Okay, I mean, you see how the chart is behaving here. It goes down, retests this support, it goes down, retests again, and now it wants to move higher. So if that's the behavior of the chart, we have to go with the fact that Apple probably going to trade higher. We want to de-risk here and close the puts. I'll give it another 4 minutes or so, just to see how it's going to react to the actual resistance here. Keep them coming, folks. Whatever you got. We still got time. Let's look at the IWM really quickly in the close here. Nothing to see. VIX, we haven't looked at the VIX, so let's do the VIX. On the daily chart, not seeing anything. Let's look at the hourly. We had potential for a double bottom. Not really. Now we're flushing down. Do we change anything in the weekly, though? That's the most important one. Momentum still bullish, still in the battlefield, but we're below the 200. Bit of a rejection here. We'll see how the PC is going to do for this chart. If it gets us above, then March is probably going to be an ugly month. But for now, with this kind of volatility, you notice that the options value for puts beginning to decay as we see the slow grinding down to the VIX. Now, if you're noticing here in the 5 minutes chart, one way we can look at it is a series of lower lows. And if we hold here, we're forming a higher low. And we could move higher, but too early to say. Too early to speculate for now. SPY, as we speak, Apple is doing the heavy lifting alone. The Qs, same thing. So we go back to the most important chart. Here it is, Apple. Here's what I would say, folks. 1250. If we're not below 182.18, I would say we have to close the puts out of caution. just to be on the safe side, because we can always re-enter. But boy, if we just wake up in the morning and we see a gap higher, because again, analysts were now beginning to upgrade. Oh, AI play. Okay, now we got to get ahead of it before it gets embarrassing. Because a lot of folks got bearish on Apple. The fear is it goes higher and it gets out of their hand, so they issue the upgrades right away. That's the risk that we have. So interesting reactions here. That it's not really being able to make it, but I'm leaning toward closing and then re-entering later on. Let's do AMD really quickly here. AMD, look, I'm closing the puts that I got into today just because the behavior of the chart. So you see that we got an initial flush down, then we got above, we recovered, retested twice. I'm leaning toward closing. You can always re-enter, but if you hold it overnight and we go above, we trade higher, that's going to be a problem. So I'm going to close my AMD puts at this point. What else we got? FLCR. Or maybe FSLR. There we go. First Solar. Daily chart. Are we seeing? I mean, I think I know what you're looking at. You're looking probably at the possibility of an inverted shoulder. Then we have a report coming here. Tough to say because we don't know what the fundamentals look like. But boy, Solar Edge was just a disaster. If you must play something here, I would go with the calls, but I would go way out of the money. So I'd go with here. Let's get rid of this. I don't want to spend a lot of money here. So 145, I mean 700, that's too much. 170, that's too much. For an ATM, too much. The options are not priced in our favor. Leave it alone. Maybe you'll go with a sister play with Solar Edge. Maybe you'll find better options there at 69. SEDG. You can play that as a proxy if you go with the 70, for example. Still too high. These options are all too expensive right now. Leave it alone. Okay, let's make a final decision here for Apple. I want to go with the 5 minutes. And, oh boy, they're not making it easy for us. They're not making it easy. I would say I would lean toward closing, folks, for now. And maybe because I'm going to close, you get your flush down and you can keep your puts. No, I'm joking, but I'm just saying that I'm not liking the reaction here, especially the analysts. I'll watch it for a couple of more minutes, but we have to make a decision before we close. Buy Apple calls as a hedge. That's a good one. So if you look at Apple, there is also the so another way we can play it, folks. If you look at Apple, I forgot what the ticker is, but there was also a levered index for Apple, right? There's a Apple bullish. So maybe we can buy calls on that ETF. Or another hedge, if you don't want to close your Apple puts, just go with this week. The problem is, Leo, the calls are so expensive. Like even if we go to the 185, I mean, you're spending 62 cents. Might as well just close the trade that we have and revisit it later. That's my final call. I'll close it, and then if we go down tomorrow, we can reopen. We can always reopen. But I just worry about the analysts upgrading overnight. Palo Alto put options. Yay or nay? I'm going to stick with my Palo Alto put options. Okay, because I think that the reaction that we got here at this level was interesting. So we got somewhat of a reversal pattern. I mean, you can see it clear on the hourly chart. Let's clean up this one right here. The hourly shows a rejection and maybe a formation of a bear. If we look at the 30 minutes, maybe it'll show it a little better. So you can see the bearish engulfing, right? So bearish engulfing, forming a bear flag, and now forming sort of a weaker wedge here that could break. So I want to stick with the puts. Too risky, of course, when you have momentum and folks just chasing what Nancy's doing. But I think that today maybe they've reached exhaustion. That, hey, maybe this is too dumb. Like, why the hell are we doing this? We begin to correct a little bit. So I want to stick with the 300 puts. Here it is, Palo Alto. 15th if we go with the 300 puts. If you're worried about it, you can always just open one below. So 250, let's spend 250 if you open the 300, 290 with the potential of making a value of $10. So that's, to me, that's pretty good. Of course, when do we close them? Anytime it crosses back above 322.61. So the loss that we're going to take is, here it is. The loss that we would take if we do that would be at around 36% if that happens. So assess that risk and see if it suits you or not. But for now, I'm going to stick with those. Apple, one more time. Yep, I'd go with closing the puts, folks. I'm up 50% on UNG calls, 16 calls for March 15th. Roll out and up, UNG. So let's do that, UNG. The hourly chart. Okay, so, I mean, you see what's going on, right? The saucer thing, and I think Henry Hub is recovering, so that's good news. We're beginning to see bullish momentum. I would say, if I'm looking at the chart here, let's just clean this cup. See where the 20 is. I would say you can squeeze it a little more to the 20. But then I'll take profits. And the reason is you look at the hourly chart. The risk is if you begin to lose some of those gains. So you're up 50%. 50% is a good gain, by the way. It's not bad. So up to you. Look, the hourly chart is losing some momentum, but that's normal at the close. That happens all the time. The daily, I think you can squeeze a little more to the 20, but then take profits. So is it worth it to wait till the 20 or just take the 50% that you got right now? I'd leave that up to you. But I think that UNG and Henry Hub, I think that we got a bottom and we're going to begin to recover, but it takes time. It doesn't happen all the time. It doesn't happen really fast. So here it is. You can see that in the Henry, we got the resistance of the 20. If we pass above, good news, then we can go all the way back to the upper Bollinger Bands. But I'm afraid that maybe the Henry will give us a little bit of a pullback since it already got a rejection of, not a rejection, but a test of the 20 days moving average. Assess that on your own. So long term, I think that we move higher in natural gas. But in the short run, if you have options, you're up 50. I mean, I'll book that profit. Thoughts on DNV earnings tomorrow. You own 200 shares and a few April 50 call contracts. Buy the 3-1 puts as a hedge. If that's for Devon. Let's do Apple before we close here, folks, before we do that, because here it is again. I'm sticking with my call. I mean, they're not going to make it easy for you, but, if we went down and we were at 181.5, I would have said, okay, I'll hold. But for now, I want to close just to be in the safe side. Final call. Okay, let's do Devon, see if we have anything to see here. Devon, we have earnings coming out. Good signs for some recovery here with the higher low, and maybe we'll make another higher low here. So that's the good news. Bad news. Plug in the Bollinger Bands. You're already at the top of the resistance here. Now we're expanding it higher, so that's bullish. But boy, this report, we have no idea what the fundamentals would be. So let's look at the hedging strategy. Since you have 200 shares, again, the weekly is also looking as maybe we're going to begin to recover here. So I don't want you to abandon the position, but we need a good hedging strategy. And I would say that losing 43 will be a problem. So let's look at some hedges for Devon. And of course, when you hedge, you want to hedge for an abnormal reaction, something big that will make you lose money on your initial position. So look, the 44 puts at 87, that's not bad. I'd go with the 43 even. So any drop 4% or above in Devon after earnings, you'll be protected with 48. And now you have 200 shares, so cost you about $100 to hedge, right? You usually go a little more, so you're probably going to buy, instead of 2 contracts, you'll buy 4. Spend $200 just in case we have a nasty reaction. You compensate more, but this is a really good hedge here. 43 puts. Where's the report? The report is coming out Tuesday, 27. So it's coming out right now. So I would have some hedges here. 43 puts, 45 cents, buy 2 at least. Just have that as a hedge and keep your shares. I think that it's showing some good signs that we could recover. Based on technicals, where does RKLB seems to be headed? Headed back above 5. It is a Russell 2000 stock for your information. Gap fills a powerful phenomenon, by the way. RKLB. So let's look at RKLB. So we talked about the gap fill up here, Rocket Labs. Now, look, we're back above the 20. Now we have a report coming. I cannot predict the report for you. I can't make a call about a report, but I can say that the stack is recovering at least some by showing a higher low pattern and maybe cutting above this resistance. So we have good signs. They could make it to the upper Bollinger Bands as a reaction of this report. But again, that's a call I'll leave up to you because it is rolling the dice before earnings come out. Thoughts on Netflix? That's a good one. I haven't looked at this one for a while. So Netflix, look, we were talking about probably a kind of a, maybe that's going to show in the weekly chart, this kind of pattern. Here it is. When you usually see a consolidation like this, it's a bull flag and it's moving higher. Excessive, sure. But look, Netflix showed us a really good report. They're increasing membership. They're charging less, but they're increasing the membership. That's always good news. I don't think I want to fight Netflix here. Now, do I chase it? Absolutely not. It's one of those charts that I'm going to leave alone. But once we get a report showing that the story is turning the other way, then I'll be interested in grabbing some puts. For now, if you want to ride the momentum, I think you can. You still have some room in the RSI on the weekly chart. The natural conclusion, if we clean up the chart here, would be that at least we retest the top of the candle, breakdown candle, 609, let's call it 610. We can retest that, so you have like $9 to play here to that retest. And then, of course, if we cross above, then the all-time high becomes the natural conclusion. The high on that is 700. So you'll find a lot of folks want to play this by buying the 700 calls. March 15th is a little too soon for my taste. If you're going to go and take that call, I'd go to April 19th. But look at how much it's going to cost you. Okay, so it's going to cost you pretty good here. Go to 670, and then we sell the 700. Maybe that'll make more sense. But again, it's a costly trade. If you want to go to March 15th, I'd just go to the target number 1, 610. So I'll go 610. And then I'm going to sell maybe the 630. But boy, these are expensive. I mean, the stock is expensive. Just keep that in mind. And the implied volatility is a little too high. So you're not going to make a lot of money trading these options in Netflix. But if you're an investor, I think that if you buy, it's going to be okay. You can challenge the highs. Of course, your cut loss, if you buy the stock, should be at the low of this candle, which is 549 even. So 549 even. You have that as a stop loss. If you trade below, you probably want to cut loss. I mean, look, if you spend $600 and you lose 50, that's a little too steep. So we need to have a cut loss on the daily. Cut loss in the daily. See the wick here? That's a wick. Here we see a gap reaction. We see another wick here. So we know that this area here is important. So we take the highs. And 568.44, we'll be conservative and call that 570 as a cut loss target, 570. So once we go below 570, $30 is the most pain I will endure before I cut this investment. Otherwise, I think you can ride the momentum in Netflix for a little longer. Okay, that's Netflix for you. Let's see how we closed. So Apple, we go to 3 minutes. Yep, didn't close above or below. So they keep you guessing, but to be on the safe side, you know, decay is an important thing, and the analyst coming out will be another important thing. So SPY, any important close here? 15 minutes, not really. We closed below on the Qs. Anything important? Not really. IWM. I mean, the IWM is a little exhausted, but that's a PCE thing. Let's look at some more. We looked at the UNG. For now, I think, look, if you're buying UNG, and you have shares, I think that you hold them. If you have call options, why not book some profits? Thoughts on Lulu? Looks like it broke above downward trend line with improving indicators. Looking to sell Marsh 455, 450 put spread to finance 475, 480 call spread, aiming for a 3%, $3 profit or 1.5% loss. Look, I mean, folks, anybody who's listening right now, this is how you initiate options trade. You know what your targets are. You know what your loss is. You know what your levels are. You don't just roll the dice and then think later. So here we have a trader who knows exactly what they're looking for. So let's check, because we covered Lulu in the charts to watch video. And I was in the camp of Lulu will break higher above. See, I still have my markings. Couldn't make it here. We refueled at around, by a 447, and now we're coming back. That's always a bullish sign. Of course, we're waiting for the actual crossing. But look, we have bullish momentum now showing up. I think that Lulu is going to make it. I think it makes it all the way to 495, 500. So I think you got the right call here, because you're selling the puts to finance the calls, and you're selling 455, 450. So you know right away, if you get a rejection, we hit down 460, you know that you need to manage the trade, because you don't want to be in the hole for these puts that you're selling. But for now, your targets are really good. 455, 450, I like those targets. And then you're buying the 475, 480. That's pretty good, because 475 is a touch above the trend line, and then 480, maybe a little too short for the profit target. But again, if that's the target that you're looking at, I think it's a good trade. Other folks who just want to go with the naked calls, we can go with Lulu 500. Let's see how much they're going to cost us. So if we go with Lulu 500, $266, it's a little too steep. We want to reduce the cost a little bit. I mean, look, that's a 7.4% move. So I'd rather be a seller of that contract. And then I would actually take the 480 and then sell the 500. And then the break even becomes 3.6, but again, it costs $450, and the maximum value will be about $20. So it's not bad, but it's a high roller table. Costs you 450, 460 naira. So that's another trade that we can do. But I do like the idea that you have, which is let's reduce the entry cost as much as possible by selling a put spread and then buying the calls. But I would say, look, go to the hourly chart and look at the reaction here, right? So you see the wick, you see another wick. So we know this is an important pivotal point. Take the low, 459. Take the high, 459. Okay, so we know the 460 is an important level. If we trade below 460, you need to manage the trade. You need to abandon this trade, because likelihood is you'll dip below the put spread that you sold. Hey, Mav, we're still holding NVDS call options for March 15th. No, I don't think so. I think those are worthless right now. Can we add more to them? Can we? I have some, but they're worthless. I mean, if there's a miracle that happens, sure, I'll take it. But do we add right now? I don't see it. I think that NVIDIA need to at least take this wick out of the picture. And the wick here, 771.62. We need to take that at least. There are good signs. There are good signs that, and it will be a big market movement, by the way, big market news if NVIDIA indeed begins to go down and fades all of this rip. It will show that everything in the report was already priced in and then some. And here was just an options market move, because a lot of folks assumed that NVIDIA will crash, and they bought all of these put options and they shorted, and they had to buy back. But we're fading it now. Profit taking is happening, and it could mark the end of this AI mania. But it's too early to say. And the other thing is, when we talk about the AI mania, I mean, look at the reaction by Apple. Sure, we got a pop, but if this fades tomorrow or by the end of the week, and NVIDIA fades, could be the beginning of the end of this AI mania. Furthermore, we just talked about the Ozempic mania, right? That could also be coming to an end in Eli Lilly. So when you look at the map, and you see where they're actually migrating to. Let's look at the S&P. Okay, some rebounds in the big caps, but you see the de-risking in technology happening all across the board. They do like the banks for some reason. I'm not in that camp. I think yields are going higher. But you see the cyclicals here. Lowe's, you see O'Reilly, the stores here catching. Every time they dip, you see a buyer showing up. Not a fan of the industrials, not a fan of any yield-sensitive utilities. But you see that here we have some good names that they're dipping right now in healthcare. You can dip your toes into them. Look at the rotation. IWM, I'm not a fan. Rotation into value, yes. XBI a little too excessive, but you see that there are corners now in the market that are beginning to open up, even in internationals. EWZ Brazil, FXI been doing pretty good. So if you look at the EWZ, if you look at the weekly chart here, to my eye, it looks that the Brazilian ETF is, again, I have my markers already, making a higher low. And the next reaction could be a higher high. So maybe the opportunity is actually overseas. And I think that if we see NVIDIA showing a negative reaction along with Apple, what are we going to do in the U.S. market with no AI and Ozempic manias? Leo, thoughts on Amazon? Let's do this one. Amazon, again, I'm going to stick with my call that Amazon is ready to correct. And it did close below my number. That's good news. And by the way, the Revvion investment, not doing so hot so for Amazon. I mean, this is just this is all-time low. So they're losing quite a bit in Revvion. I think that shows up in the next report. So that's part of the thesis why I think that Amazon is ready to give up some of these gains. So I want to stick with the puts in Amazon, but boy, Apple tomorrow is going to be important. We'll see what the analysts say. If they shut their mouth, say nothing, then probably the managers will continue to de-risk, get out of chips, get out of the big caps, find other corners in the market to play. If you guys have nothing else left, we're just going to wrap it up right here, and I'll be back working on tonight's video. I want to produce that a little earlier today. So we'll give it a couple of minutes. If no more questions, we'll just wrap it up right here. All right, folks, seems that we're done. So thank you for joining us. We'll touch on the issues of the live streams. Folks on Patreon are worried about losing access to the previous streams. So we'll address that. We'll address the double billing. We'll address access to Discord just to make sure that everybody's happy and we're all on the same page. We have some more here. We have CROX. Let's do that. Crocs. ANF and Carvana. Let's do those. So Crocs, what do we see in Crocs? Look, if you go down in the chart, this is the daily chart. And if you go, I think I have some markings here. Yep. So we have 111. We can move that higher since we have an excellent wick here. We can go to 112 to 32. And resistance will keep it at the same number, 122. So look at the behavior of the chart. It retested this level after a gap and held. Then it went down and rebounded above that level, from a level above, which again, if you look at the hourly chart or a shorter term chart, you will see that we have somewhat of, if we clean up this, we don't need this anymore. You'll see somewhat of a higher low reaction of a rebound. So I think that this is bullish behavior. What's required right now is just crossing above 122 before the chart plays out. If you look at the weekly chart here, the chart could be in a process of sort of a cup and handle pattern to challenge the highs here, and the highs of 130.36. So we can challenge the pattern right here. But I think that we have to close above 122 to be comfortable that that's the case. Now, if you want to short the chart, is there a case for it? Yes, there is. And the case would be that maybe we're not ready to cross above 122 right away. We have a bear flag pattern here. We can retest some of the supports. There's support right here, 116-ish. There's support. Then there's, of course, the lower support at 112. But I would say that the bullish case is stronger than the bearish in CROX. Now, ANF. can we short the chart? Look, we got a really good indicator here that it was good. But then came NVIDIA and, got us higher again. What is the correlation between ANF and NVIDIA? I have no idea. But is this a chart that we want to continue to pick on? Maybe as we get closer to the catalyst, but that's not going to happen until, I believe, next week. For now, let me show you something. If you go to ANF and you try to buy some puts for March 15th, which will cover the report, stock trading at 125, but the options are trading as if it is Super Micro or NVIDIA. It's just too crazy for me. If you go to the 120, you need a 10% drop for break even. It's a high roller table for a shitty stock that's trading at $125. It just doesn't make sense to me. And of course, the risk is always the stock drops down, then it consolidates a little bit. So maybe a topping candle, right? Maybe a topping candle today. But if it drops down a bit and then consolidates to 120 exactly, then consolidates, you'll lose money either way because this is what's going to happen. Implied volatility drops. And unless you are at 110, 109, 111, you're not making profits. So this is why I'd leave ANF alone. And the same with Carvana, by the way. So if you look at Carvana, sure, out of whack, yes. But can it get even more out of whack? Yes. And the reason is look at the volume. Right? We got higher volume today. So maybe it's not ready to go down. If you take a shot against Carvana, probably 70 will make sense, right? So we'll do Carvana. 15th, and we'll go with the 70. It'll cost you a lot. For an $80 stack, it'll cost you $260. Now you're going to need a 16% drop to make your buck back. If the implied volatility goes down, and the implied volatility usually goes down, if the stack pulls back, it then consolidates. Let's say 66 or even 70. Here's what would happen. Implied volatility goes to, let's say, 80. Now you make $21 if you're at 21% or 14, depending on the day that's going to happen if we're pulled back. And of course, there's also a risk of the stock going higher. So ask yourself a question: is it worth it to risk all of this money to make 21% or even 56% if there's a sharp correction rapidly? Is it really worth it? Because for you to make big bucks out of this trade, you need a 23, 25% drop. And right now, we just don't see it. So we need a drop of 22, 23% rapidly. I just don't see it based on the indicators of the candlestick pattern today. I know what the psychology is. We're all prone to falling in the same traps, folks, which is, okay, stock goes way out of whack. It means it has to come down. But here's the lesson, the chart that we all have to refer back to. Let's clean it up. I mean, it kept going and going and going and going until we got the break, and then it became tradable again. But now the implied volatility is cooling off. It's going to increase big time, but I'm not sure if it's going to increase to the upside or the downside. So I would say let them make the first move up or down, and then we'll follow. But you need to see something like this before a chart is unlocked. ANF, GoDaddy, a Wingstop. You need to see a reaction like this before we unlock the chart and it becomes tradable again. Okay, folks. I have a few more days on YouTube. I'm holding on Patreon. We'll address that, and I think everybody should be happy by the end of the day. Beyond Meat is up 30% after earnings. Maybe they said AI, right? Maybe they said the two magical letters too. Let's look at Beyond Meat. Let's do extended trading. Oh yeah, big reaction. It could be tradable tomorrow, right? We could trade this one, the morning brief, tomorrow. So let's do that. But another chart that I want to bring your attention to is Shake Shack. Here it is. I mean, you see the breakout in Shake Shack, and you see. We kind of talked about the inverse, about the cup and handle, right, in the chart to watch, and here it is. I mean, it's getting to a resistance here at the top, and I think it's passing, so 185. Let's do that. So yes, you're seeing some of these smaller caps, heavily shorted names kind of going crazy all of a sudden, and maybe that's lifting the IWM, that a few small caps are getting heavy short covering, and that's what's lifting the IWM. But it's interesting that Shake Shack or Beyond Meat moving to that magnitude. I think Beyond Meat will have a trade on it tomorrow. So stay around for that. All right, folks, let's just wrap it up right here. But we have Google. Let's talk about this one because this is important from yesterday. So whether we're looking at, most people are trading the one without the L. So let's do that. And we don't need this or all of the crap right here. Okay, so, you see the gap, the wedge pattern, declining RSI. The vortex is suggesting that we're probably going to see bearish momentum taking over. We've seen false breaks here before. It could be the real deal because the MACD is also trending down. Look, the last time we got a nasty flush out of it in October. So it could be another flush coming for Google. And I think the problems with AI, now that Apple is getting into it, could even intensify the problem for Google. Below the 20, got a reaction of the lower Bollinger Bands, but boy, those can expand really fast. So for now, I would look at the weekly. If you're betting against Google, you have to have a longer time frame. And the reason is you're looking for a loss of the 20 weeks moving average. In the meantime, you could see rebounds in the daily based on the support of the Bollinger Bands. Two ways we can deal with this. You can wait a little more. If you can't wait, you can always take a longer expiration date and open in increments. So if it goes higher, but it fails to crack above the top of the breakdown candle, you're still good. You can add another increment when you see the stock is ready to turn around again. So Google, we're negative. And even if it rebounds, I think we open more. But I leave the entry up to you. Wait for a rebound to be exhausted first or open in increments. Anyways, folks, let's just wrap it up right here and get back to work for the daily show. But thank you for being with us. I hope this was helpful and, you learned a few things. And then we have more trades to do tomorrow. Thank you for being here. Talk to you soon. Take care.